a lot of investors are moving away from Nvidia. To some, this is a worrisome fact, and it's even fueled more by a potential ban of Nvidia products from entering one of their biggest markets. But for others, it's also a unique opportunity. For them, it's a rare window to stock up on Nvidia's shares, especially with how Nvidia plans to move in the future. Is this really a good window for Nvidia now? What do they have in store for the future? Well, let me explain. Disclaimer. Nvidia's recent bull run may have come to a stop. Tons of investors are moving away from them. And this isn't even the biggest update. We're also seeing a number of companies looking at Nvidia alternatives. However, there might be a silver lining to all this. This could even benefit Nvidia in the long run. How so? Well, let's first look at what's currently happening in the tech industry and Nvidia. Huawei might now be looking to grab Nvidia's market. The company has begun testing a new AI chip, the Ascend 910C, as China pushes to find alternatives to Nvidia's advanced GPUs. With US sanctions limiting Nvidia's sales of high-end chips, Huawei sees an opportunity to fill this gap. And they want to do this as quickly as possible. This new chip is aimed at major Chinese server and internet companies and marks an upgrade from the previous model, the Ascend 910B. And what's interesting is that this chip has already been widely used across China. The Ascend 910B chip has played a key role in training over half of China's large language models. This chip shows the significant progress Huawei has already made in AI technology. But that's just the tip of the iceberg. Now, with the Ascend 910C in testing, Huawei is positioning itself to become a leading provider of AI processors in China. And they could potentially replace Nvidia's GPUs in the country. This shift is driven by China's ongoing efforts to become self-sufficient in the tech sector, especially as US sanctions continue to restrict access to vital technologies. Nvidia's GPUs have been a critical part of the AI development process, but the sanctions have left a void in the market. Huawei, with its Ascend chip lineup, is stepping in. They want to fill in the gap, and this will ensure China can continue to advance its AI capabilities without relying on foreign technologies. The development of these chips is important for China's long-term plans. However, it can be scary to Nvidia investors. If successful, Huawei's AI chips could reduce China's reliance on US technology, which has been a goal for years. The country is pushing hard to close the gap in the semiconductor industry, and Huawei's advances with the Ascend chips are a major part of that effort. Large server companies are already testing the new chip, and if it performs as expected, it could reshape China's tech landscape. And this new future could be one without Nvidia in the picture. This shift has broad implications for the semiconductor market, not just in China but globally. Huawei's progress could challenge Nvidia's dominance in AI chips, potentially altering the competitive landscape. Tech stocks, particularly in the semiconductor sector, may see shifts as Huawei positions itself as a viable alternative. Experts believe Huawei's Ascend chips offer a real chance to replace Nvidia's GPUs in China. This could accelerate China's AI development and strengthen the country's tech self-sufficiency. The market is watching closely as Huawei tests its chips. And success could lead to a major shift in how AI applications are powered in China. For investors, this could signal a major change in the semiconductor industry. Monitoring Huawei's progress is crucial as the company works to reshape the future of AI in China. Their decisions are so crucial that it might have even affected other investors. How so? Well, recently, the excitement around Nvidia has cooled off. There's a possibility that investors are rotating their money out of Nvidia and into popular Chinese stocks like Alibaba and Pinduoduo. And it's not surprising that this is happening. These Chinese companies seem to be gaining more attention at the moment, and Nvidia might be seen as a source of funds for this shift, as shared by a user on X. This shift could be one of the first signs of companies like Huawei searching for alternatives to Nvidia's chips. With Huawei testing its new AI chip, it's clear China is looking to reduce its dependence on Nvidia's high-end GPUs. This isn't just about Huawei either. Other tech companies in China are likely following the same path, trying to become less reliant on foreign technology. As these companies move toward their own solutions, it could gradually chip away at Nvidia's dominance in the market. For Nvidia, this could spell trouble down the road. If Chinese companies, which represent a huge market for Nvidia, start opting for local alternatives, it could reduce Nvidia's sales in one of its most important regions. Investors might begin to lose confidence in the stock if they see a slowdown in growth from China. That could lead to further drops in Nvidia's stock price. And there's even more terrifying news than this. If Huawei's chips perform well, more Chinese companies could jump on board, accelerating this trend. Nvidia could find itself facing stiffer competition not only in China but globally. As more alternatives become available, Nvidia's once uncontested position in the AI chip market could weaken. For investors, this is something to watch closely. If China's push for tech self-sufficiency continues to gain momentum, it could have lasting effects on Nvidia's future, both in terms of market share and stock value. However, to some people, all is not lost. They see this as an opportunity to grab more Nvidia stocks. And to other investors, they might even be a bit happy that Nvidia is pulling back a little bit. It's true that Nvidia's stock has dropped in price recently, but the fact that Nvidia fell just slightly on this news about China potentially banning them says a lot. There's still a chance that this drop may become bigger, but for now, some people consider it small compared to the potential effect of the news. Any other company facing something this big could have seen a much bigger drop in stock price. But Nvidia's small decline shows its resilience. Despite the challenges from Huawei and the potential shift in the market, investors still have strong faith in Nvidia. This shows just how solid Nvidia's position is. The company has built such a strong reputation and market presence that even major disruptions barely shake it. Investors likely see the long-term potential in Nvidia, even with new competition on the horizon. While the market may be shifting, Nvidia's ability to weather the storm shows its strength. The stock may dip, but it's not collapsing. This could be a clear sign of how powerful Nvidia remains in the tech world. And as shared by another user on X, Nvidia's position in the market is too strong to be affected by other companies. Some people are noting that one major issue with China developing its own chips is that Nvidia's products are far ahead of any Chinese chip makers. Nvidia has set the standard in the industry with its advanced technology, and China knows this very well. Even as companies like Huawei work on their alternatives, they still have a long way to go to match Nvidia's performance and capabilities. This gap is significant and won't be closed overnight. What's happening now is a lot of noise around the potential for Chinese chips. While this news may create concerns, it also presents a buying opportunity for investors. This is classic market behavior. When a strong company like Nvidia faces challenges, the stock often dips. But for those who see the bigger picture, it can be a chance to buy at a lower price. Nvidia remains a leader in AI technology, and its innovations continue to drive the market. For investors, this could be the perfect moment to consider Nvidia as a solid long-term investment. The fundamentals are still strong, and the company's position in the industry is not likely to change anytime soon. However, only time will tell where Nvidia could go in the future. After all, no one can accurately predict where stocks would move towards. What's sure, however, is that Nvidia's strength comes from the versatility of its products. And this might be their saving grace amidst everything that's happening now. As you may already know, the company originally designed its GPUs for gaming. However, these same GPUs have become essential in AI and machine learning applications. They are used in a variety of fields, from data centers to self-driving cars. This adaptability gives Nvidia a significant edge in the market. While other companies focus on specific applications, Nvidia can cater to a wide range of needs. This broad appeal helps maintain its leadership position and keeps the demand for its products strong. As technology evolves, Nvidia remains at the forefront of innovation. So what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.